What's going on, guys? Welcome back to the channel. We have a little bit of an emergency here on our hands, and I kind of want to rally the troops because I think a lot of people fail to realize how close we are to actually seeing the MOAS and how much liquidity is actually being restricted. If you look at any business outlet, if you look at CNBC, if you look at CNN Business or Fox Business, any other site, it's all super bearish. Now, there is an analyst, because I watch a lot of videos, probably 50 videos a day from different analysts on different news outlets, because I want the opinions and then I come to my own conclusions. I've had the same opinion for months now, literally months now. Take a look at this. That essentially liquidity drying up is what's going to cause the MOAS. This was from 3 months ago on the community page. It says, is everyone aware of the Evergrande situation and what that could mean for global markets and how the overall markets coming down will cause the big hedge funds to cover their short AMC shares? 62% of you guys said yes, 14% said no, and then 23% said, what does Evergrande have to do with anything? So that's the whole logic here, that we are very close to the MOAS, and just like this analyst says, it's coming. Take a look at this.
So when the bubble does collapse, it's going to take down the major indices away from it. That's not to say that there aren't opportunities. What happens in a bubble, like people focus on the negative, but it creates vacuums and scarcities of capitals in other parts of the markets. We have a saying at RBA, returns are greatest when capital is scarce. You create massive scarcities of capital, and I think that's where the opportunity is. So yes, you want to be careful when owning the broad market, but I think there are areas of the market. I mean, just think, during the tech bubble, small cap value stocks were up over 40% when the market was collapsing.
Replay that if you guys did not get the gist of that. What he's saying is short squeezes happen when liquidity is restricted, just like we seen in '08. There was more short squeezes that year than any other year in history. Why? Because liquidity was at its all-time low. So that's one part of this, but take a look at this other clip as well, and then I do want to talk about a couple other things.
At the Federal Reserve balance sheet, because if the Federal Reserve was a private bank, and you looked at that balance sheet, you would say this company is insolvent. The reason why you would say that is because the Federal Reserve's source of money, which comes from printing, it comes from collecting, money from the banks, in reserves, comes from a couple of other places, is in deep trouble. If you would look at that balance sheet, you would realize that more than 100% of the increase in the Federal Reserve balance sheet in the last 12 months has come from borrowing money in the reverse repo market. In other words, the Fed is sitting at borrowing money at the shortest end of the curve in order to fund the purchase of long-term treasuries. The balance sheet is a disaster. It's a disaster because there's virtually no equity and $9 trillion worth of assets. And I apologize, it's a disaster because it does not mark to market its treasuries, and it does not pay reserves against its mortgage securities. That's where the problem lies. The bank, they've got to solve it, and when they do it, it's going to be very painful.
So to boil all of this down into English for you guys, liquidity is about to be constrained, something of the likes we have not seen in over 2 years' time. Now there is Bill Ackman. There's many other people calling for a surprise Federal Reserve come out just here the 25th and the 26th of January at their next FOMC meeting to say, hey, we're going to raise interest rates by 0.5% instead of 0.25%. We're going to do 0.5%. We're going to shock markets. Literally, they are saying we are going to sacrifice the markets to control inflation. But what's the funniest thing about all of this? And what have I been saying this whole entire time? Inflation is not going to be a concern in 2022. Nobody thinks this. Nobody thinks this. Let me prove this to you. Inflation expectations are 3.8%. Yes, that is over the target, but that is not a huge problem. It's still a problem. Don't get me wrong. It's not a huge problem. It's not a reason to crash the markets into the ground. What is going on here? And I think a lot of people, I wouldn't say everybody is in on this, but I think a lot of people, all of these analysts, they all have short positions on whether it's AMC or the broad markets, and they are trying to scare you into selling your positions. That is what is going on here, and that's the only logical conclusion to all of this. And why I really wanted to get this video out to you guys tonight is that we do have bank earnings tomorrow morning. And this is what has really been kicking off this downward spiral. Well, I mean, this has been happening for months now in the NASDAQ, but this is really what crushed stocks today and over the last couple of days, anticipating bank earnings. And then once we got them, we obviously, that's the rest is history. We sold off today. Bank earnings continue on Wednesday with reports from Bank of America and Morgan Stanley slated before the bell. And that's what's key. Before you guys likely even wake up, the markets are either going to be up a lot or they're going to be down a lot. Odds are they're going to be down quite substantially. It wouldn't surprise me to wake up, markets are down another 1%. AMC's down another 5% or so. That's only speculation. Those are only rough estimates here. Or vice versa. AMC could be up 5%. The markets could be up 1%. But what I'm trying to say here is that the trade is actually more alive now than we have seen in a very long time, because there is too much money out there and it is being sucked in like a vacuum. And like this guy said, he literally called out short squeezes without saying the words short squeeze. And considering the margin levels, $918 billion, like we already went over, and the SBL loans that aren't even accounted for, that are in between $500 billion and $1 trillion, which is basically loans on your portfolio through a bank, not through actual margin debt, so it's not reported. All in all, you're looking at a really big liquidity situation that is about to unfold with margin calls like you have not seen before. So that any slightest catalyst to AMC, once the markets are dropping, anything, the popcorn business would have caused the most. The fucking NFT situation would have caused the most. The crypto situation or catalyst, whatever you guys want to call it, whatever your terminology is, that would have all caused big reactions to AMC. And considering the short interest is at pretty much yearly all-time highs, damn near, it's looking pretty good. And the last thing I want you guys is to start getting emotional and super fearful when a lot of the pain has already been realized. And of course, I'm not a financial advisor. Everybody's situation is different. Obviously, only invest money in speculative trades, right, that aren't long-term investments that you can afford to lose. But I don't personally think now is the time to be panicking. This is the time that we have been waiting for, that I even made that community post 3 months ago. It's finally here. I'm more excited than ever. You just got to get through the pain before you see the pot of gold at the end of the rainbow after the thunderstorm. So hopefully that was a good analogy for you guys as well. We did actually put on a lot of trades today as well. Some lucid puts at the end of the day, as well as some SoFi trades and a couple other things today that are going to be super profitable. Fingers crossed tomorrow. So if you guys want access to all of those trades and join the conversation, check that out. Link down below in the pin comment. Love and appreciate you guys. Hopefully you found some value out of this video. If you did, hit that like button for me. Consider subscribing to the channel as well. Comment down below, what do you think about this information as well? Are you buying more? Are you being greedy? Are you fearful? Are you scared? What is going on? Love and appreciate you guys. Thanks for watching. I will see you in the next one.